everyone, Caio here, and we're here with Chuk from Paxos, another episode of Stable Talks. Really excited about this conversation. And of course, we always start saying that any of these topics or discussions that we have here are or need to be considered as financial advice. So it's only a matter of educational purposes. So, don't follow our recommendations. But yeah, Chuk, how's it going?
Awesome, I'm doing well, and thanks for having me.
Yeah, so Chuck, we have been like discussing a lot recently, like in our stablecoin bubble.
Mm.
Your content always appeared to me on LinkedIn feed. We have been interacting with each other for quite a while. But yeah, I would love to, of course, you introduce yourself first as an individual and what you do at Paxos.
Awesome. Yes, so I can start. My background is really in traditional finance. I started my career in investment banking at Morgan Stanley in London. Then I went more into technology investing at a private equity firm called Silver Lake, which is a large US firm, also based when I was based in London. And then I came over to the US for business school at Harvard. So I see the cap there. And then whilst I was there, I was really thinking whether I stayed in private equity or figured out how to be an entrepreneur and uh, wanted to understand what that was like. And so I decided to start looking at startups to join. And I joined startups in my 2 years there at business school as a product manager. It was EquityZen was the first one, which is a private marketplace for shares, or like a shares marketplace for like private shares. So I think like back in the day, Uber, Palantir, things like that, you could trade and buy and sell. And I entered the world of startups there as a product manager. And so I've been in product now since I left business school for the last coming on 9 years now, or I guess a while. And the entrance after that was really staying in fintech. And then I joined Paxos around 2021, where I've been working on a range of different things. For those who don't know, Paxos is a stablecoin issuer, but we also have lots of blockchain infrastructure services that we provide on a white label way. And so that includes custody, brokerage, and money movement. So at Paxos, I've worked on a range of things, tokenization of equities, uh, commodities, post-trade settlement systems, collateral management systems for institutions, blockchain integrations, cross-chain interoperability, and over the last kind of couple of quarters, I've been working on our money movements and payments. And so one of the things that the teams that I work with do is we facilitate moving in and out of stablecoins, of course, Paxos stablecoins, but also non-Paxos stablecoins, such as USDC, such that folks can get their stablecoin for as as we are a primary liquidity, but they can also use our systems to kind of orchestrate their own platforms. And so we see a lot of payment companies come to us, and given our licensing in the US, they want to come in and get enable onboarding of their US customers. We're licensed. We have a trust in a New York-based trust that allows us to operate across the US. And so folks use our licensing to serve their own customers.
Sounds bullish. Yeah,
Yeah.
pretty interesting, man.
And
Yeah,
so I guess my entrance into crypto as well, I guess I did mention that, but I've been in crypto since call it 2017. More personally, I've always been very keen to understand the technology and really kind of spread the word, I guess, about Bitcoin and blockchain technology. But I didn't enter the industry until I joined Paxos. So but I think before then I was just call it more of a degen, trading
yeah.
various different tokens and NFTs and writing like trading bots in order to trade and stuff like that. So I guess I've been in the trenches for a while, but my work at Paxos is more like institutional.
Yeah, this is how everyone starts. You
That's
first
right.
start at the DJ in the day, actually, enthusiast at the day and a DJ at the night, and then we move to the institutional side. This is how
That's it.
we all are. But yeah, like pretty interesting, man. Like, I think that one thing that we can kick off the discussion here is recently I have been really hearing more about the concept of on-chain banking, right? And I would love to hear your thoughts on what is on-chain banking.
Yeah, absolutely. It's one of the things that I'm really interested in. I think when I think about stablecoins, there are two main kind of groups of use cases. There is on-chain banking, and then there's payments. And payments and banking are very related. At the end of the day, thinking about an economy and a financial economy, you want to be able to store value and then use the value. And so storing it and using it as both banking and payments. And so what we're having with stablecoins and blockchain technology is the ability to store value and be able to use it for various different things. So as a consumer or as a business, you can spend, you can borrow, you can receive and send and earn. So those are all of the kind of primitives that one thinks of as a member of the financial ecosystem. And on-chain banking is being able to do that on-chain, i.e., through blockchain technology with a combination of stablecoins, yield-bearing assets, maybe DeFi, maybe centralized finance, but really you're enabling access to banking to a wide range of folks. And I say wide range because it really depends on the use case. Maybe it's people who want dollars. Maybe they want different currencies. Maybe the core thing is they just want a way to hold dollars offshore and spend from an account. Maybe they want to trade crypto. So there's lots of different use cases. There are lots of different target users and target segments that one needs to talk about specifically when thinking about where the value is. But in general, you're taking something that exists in traditional finance, i.e., hold, spend, send, receive, earn, and you're applying it to blockchain technology.
Yeah, and based on these primitives and use cases that we can have, thinking about payments and banking, um, there are different, and talk about stablecoins specifically, there are different types of stablecoins, right? Most recently, we have been seeing a surge of quote unquote branded stablecoins or, niche stablecoins, purpose built stablecoins. So it's not like, okay, now I have a stablecoin that can be used for everything. We have been seeing more and more stablecoins built for specific objectives and specific niches or verticals. So Paxos is one of the main issuers in the ecosystem now. You guys have several like issued stablecoin issued by you, and of course, some of them have similarities, but some of them have its own specifics. So if you could share, like, which are the main products and that have been issued by Paxos, and which are the key differences between them?
Sure. And so just at a high level, yes, I think it's really easy to technically issue a stablecoin. The code that you need to write the smart contract to create a token that's worth $1 is very simple. And there's a lot more that goes into a stablecoin. It's not just the technology. That's one element of it. The other elements are the safety and trust, how the reserves are managed, what gives the market faith that it can be redeemed for $1 at any time. And then there is increasingly regulation, how it can be used and handled by companies who are regulated or consumers or not. Then there are other aspects of stablecoins as a product that are not necessarily related to the technical side of things or the trust side of things. And that it relates to distribution, the network, how available it is, how liquid it is, and where it is available, how you can get it, and can you get it easily. And so there are many, many aspects to a stablecoin and what it represents and how to get it. And so when we think about stablecoin issuance as a service, you have Tether, you have the major stablecoin issuer, Circle, second in terms of market cap. And then if you are a company who wants to be able to provide stablecoin related services or have your own stablecoin, there's a lot that you need to do. Like I mentioned, the technical issuance itself is one thing, but then the custody, the safety, the reserves, the regulation, and then the building out of the network, distribution, getting it listed on exchanges, capital, the list goes on of the various different things that one needs. And that's where an issuer comes in. Not only do they help with the technical side of things, which for some companies they may or may not want to invest in, but we're really the white label, and we have outsourced we are the outsourced regulatory element, compliance element, all those are the things that I mentioned. And so companies come to us to issue their stablecoin, and we can talk in a moment about why companies may want to issue their stablecoins. But in terms of what our product portfolio looks like at the moment, we have PayPal stablecoin, PYUSD. So PayPal are our customer, and we issue their stablecoin, and it's currently available on Ethereum and Solana. So with USDG, it's a dollar-backed stablecoin that is issued out of Singapore and is compliant with the upcoming regulations of the MAS. And so it is functionally similar to PYUSD and USDP in the sense that it's a dollar-backed and can be redeemed and minted one for one with a dollar. And the reserves that back it are cash and cash equivalents. So very, very safe treasuries and short-term US government debt. And it really powers the global dollar network that I'm sure we'll talk about in this conversation. But really, it's a network of partners who each probably would have their own stablecoin or would like to have their own stablecoin. But by joining the global dollar network, they can all get the benefits of having their own stablecoin whilst contributing to this distribution network, while Paxos manages the reserves, the regulation side of things, the distribution, the capital, and liquidity, as I mentioned at the beginning. And then we have other stablecoins, SDL or Lift Dollar, where it is a yield-bearing stablecoin, which is rebasing. And so it is a stablecoin that grows the reserves that as they generate value, they're not held by the issuer. They are distributed through the token, and the token within its wallet, within the wallet of the holder, grows in value. And that is issued out of our entity in the UAE, and regulated by the FSRA. So those are three different kind of key tokens that we have. We also have USDP, which is the Paxos kind of branded stablecoin, US stablecoin, also regulated out of the US. And that is what folks often use when they don't want anything branded. They just want to be able to get a regulated stablecoin. And then the last product, Pax Gold, is not a dollar-backed stablecoin. It's a gold-backed stablecoin, but it's one of the original, aspects of real world asset tokenization. The gold is backed by the LBMA, which is a standard in London. That's the market for the gold, and it's held in vaults and gold banks in that market in London, and it's redeemable for actual gold. And so if you look at the price of PaxG, it tracks pretty much one-to-one with an ounce of gold. And so that is the portfolio today. And I'm thinking about the key differences. You can look at kind of PYUSD, USDG, and USDP as kind of the same standards in terms of its reserve-backed token. But when thinking through our kind of issuance as a service model, we have PayPal as a customer, and then the global dollar network as a customer. And we issue those tokens on the various different chains, help with the the reserve management and the network building and the distribution.
Yeah, I think that one of the main things that we have been seeing is, and going a few steps back, right? As you just explained, like different stablecoins have different verticals slash use cases that have been focusing on. And one of the most interesting things recently are the surge of yield-bearing stablecoins, which, from a regulatory perspective, in Brazil, and thinking about how people are thinking here, it's not that clear of how this can be incorporated into the system that we have today. But me personally, and of course, as builders, I'm pretty excited about it because you can unlock a huge amount of value when it comes to this treasury management or even global dollar accounts from a retail perspective. So how are you guys seeing the evolution of yield-bearing stablecoins from a regulatory perspective? And of course, the adoption of it when it comes to the institutional side?
Yeah, so I think there's a lot of use cases for yield-bearing assets. And I think it's important to think through what the end user is trying to do. There are multiple ways for consumers to earn yield on stablecoins, for businesses to earn yield on their balances, and for traders to use yield-bearing assets as collateral. And so there are many ways to create a token or an instrument that enables those use cases. And so you can have rebasing models such as USDL and USDM from Mountain Protocol, where the yield is distributed directly through the token itself. You also have other models where the yield is passed on through other relationships or contract business or commercial contracts. And so when you think through Circle and USDG or what Coinbase are enabling through their wallets, then it's not necessarily direct one-to-one yield to user, but there is value in the system that is being shared with the user. And some of that comes from the yield, some of that comes from the business. But at the end of the day, you are incentivizing some parts of the ecosystem with revenues generated from the ecosystem. And so from a regulatory perspective, it gets very particular depending on where the user is located and what is happening. And I think each jurisdiction has very specific rules around what makes things securities, such as in the US. And if something looks like a security, and then there's a Howey test and other related ways to kind of work that out, then it needs to be offered and sold in a very specific way. And so I think when you have various forms of distributing yield or value, and you have assets where it's very much directly tied and very much looks like a security, or it is some kind of like algorithmic or basis trade backed token, then from a regulatory perspective, each user and each institution needs to think through the implications of that, and issuers as well needs to think through the implications of that and work within the correct regulatory environment where they are issuing and where they are distributing. And so in general, I think, one of the biggest stable coins is Athena's USDE, pushing $5 billion, where, the term stable coin is used, but really it's a kind of tokenized trade, a tokenized yield-bearing asset, which can be used or exchanged as a dollar, but it's not necessarily kind of driving payments volume. I think that's a great example of a fantastic product that is built for a purpose and has found product market fit for that purpose. And so that's why at the beginning of this now fairly long-winded answer, I thought it was important to share that the use case is really important. What is the user type? What do they want? And how do you manage to deliver that? There are multiple ways of solving that problem or solving that use case. And you can embed it into the token. You can go around the token. You can call it a stable coin. You can have yield-bearing assets that are kind of tokenized treasuries that maybe focus more on institutions or focus more on folks who want to back their assets with treasuries. And so the list is very, very broad because the use cases are very, very broad.
I get so excited talking about this because I think that in the next year we'll see like a huge amount of value to be unlocked with these assets. In Brazil, we already have like this. So Brazil is a really specific place where we have a huge financial innovation agenda since like years ago, due to the whole thing that happened during the country's evolution during time, the problem with inflation. So the whole ecosystem in Brazil always was like, oh, how can we survive all these problems that we have? So this is how the whole financial innovation came in the Brazilian ecosystem. So Brazil already have a kind of mature RWA ecosystem where we have a lot of yield-bearing assets being offered by different products from different companies. So you can easily find fixed income real world assets. You can find a lot of alternative investments from receivables, from bonds, all tokenized. And you can invest with little amount of money, such as like 10 reais, which is crazy because this was something that was strictly for high net worth individuals back in the like years ago. So I think that it's only a matter of time for these stable coins and different type of yield bearing assets to come in place here. And now Brazil is actually regulating the space. Now we are in the middle of some public consultations regarding VASPs and stablecoin FX. So yeah, like I started of the timing because I think when the regulation comes, we will see if you already are, no, so a lot of things going on. Imagine when the regulation comes. And thinking about this perspective, recently, and considering what we have been just talking about of stablecoins and yield bearing and all of those different use cases, in Brazil, we have BTG Pactual, which is actually a Lumx investor. So BTG is an investment bank and partner of Circle. So they have been doing great things with Circle here in the region. And we have Nubank, which also has a strong partnership with Circle, and now is actually offering yield on top of global dollar accounts on the Nubank app. So this movement was pretty interesting because we was like, oh, we won't see any bank try to do anything with this in a few years. But when Nubank did, as you can imagine, everyone was, oh, we need to look at this. Maybe we can offer this to our end customers. So it's been pretty exciting. And when you look at the whole LATAM ecosystem, you always have the discussion of, okay, we live in a place where the currencies are not that strong. People always want to have access to dollars. Stable coins is an easier way to get access to dollars. So if I can have a dollar account, which also accrues yield, is a better of all worlds. So I think that the product market fit is already here, right? But the problem is now that markets are getting more mature, regulation is coming. Of course, the central banks are still trying to figure it out what that is. So yeah, I think we would maybe see some kind of differences on what we can and what we cannot do, especially this year in 2026. So yeah, the space is exciting to be here.
Yeah, no, it's really exciting. And I find it really interesting the convergence of what the market wants and then what the central bank or the government wants. And, in the grand scheme of things, you imagine the government wants to promote, financial inclusion whilst managing consumer protection, but also just promote economic growth and prosperity. And there are multiple ways of doing that. And you need to be also try to manage, trade flows, currency flows, manage capital controls, and think through, the effectiveness of monetary policy. So lots of things for the government and the central banks to manage and try to connect, whilst also dealing with the fact that a lot of this technology is decentralized. And so it's increasingly hard to stop consumers who want to be completely self-custodial to get access to some of these products. And so creating a framework where you are protecting consumers and making sure that they're not being scammed and they're not being sold things and they're the right disclosures and not being sold things that are not real or that are scams, right? The right disclosures and the right kind of protections is super important. Whilst also balancing, okay, well, if I push too hard, they may go offshore or they may go to like the gray market. So I think it's a really interesting policy question for governments and central banks, and looking to see, okay, how can we make investment products available that we are comfortable with and are suitable for the consumers who are interested in them? I think is a question that various different central banks are dealing with, and the consumer demand is going to play a big factor of what will be allowed and what will not be.
Yeah, 100%. And one of the main things that you talk about self-custodial banking, this is something that is pretty interesting too, because most recently we have been seeing this surge of um, global dollar accounts leveraging stablecoin infrastructure, stablecoin cards. So all of these different products that are coming. A lot of companies in this space have been doing a great job with these products, raising like high amounts of money to build these products. So curious to hear your thoughts about this new wave of self-custodial banking, if you can call it.
Yeah. So it's really an interesting concept, and it's really empowering for the individual and the consumer. And there's a trade-off, I guess, to make where on the one hand, as a financial institution or a startup or a business, you can avoid, I see, or like not have to worry about certain regulations, because you're technically not holding the funds, you're not managing the funds, you're just providing consumers with software and the tools. But I think in general, even though there is a kind of specific, you know, factual reading of the rules and regulations, there should be general guidance for how these things work. And you know, there's a lot of education and consumer protection that still should happen, regardless of whether it's self-custodial or not self-custodial. And so I'm excited for the freedom that those applications bring, but I think it's important for either to be industry bodies or guidelines or maybe even regulations that say, sure, you can build these applications and it's not going to be regulated in the way that banks are regulated or other custodians are regulated. We're going to regulate it in another way because we want to make sure consumers are protected, and that even though they are in control of their assets and they are in control of the situation, um, they are informed, and they're informed in the way that they can make those decisions. But in general, with that kind of caveat out of the way, I think it's a really exciting trend, because you're removing the barriers for people to get access to what they want. And again, it comes back to getting the right use cases and making sure it's the right target user. But what you're enabling is you're piggybacking off mobile wallets, mobile phone penetration, internet penetration, and as consumers globally become more and more tech savvy, the idea of being able to carry dollars with you and be able to receive and send globally is very, very powerful. And when you think about it that way, it seems kind of strange that we have the most powerful AI models who can code entire applications in a few minutes, but we can't hold money in our pockets digitally. We can't send it globally. Uh, and so I think there's a huge trend. And I guess the last thing I'll say is, to really have, I guess I'm going back to the regulation point, or the kind of fitting within regulation, I guess, is really the way to think about it. To really have a global adoption, this kind of self-custodial world needs to be interoperable with the existing financial system. And so even though the models of custody and onboarding and these other things are different, I think it's important for kind of consumers, companies, startups collectively to still care about consumer protection, sanctions, anti-money laundering, and financial crime, so that more traditional financial firms are happy to interact with the self-custodial model. And that may include some kind of identity verification. Maybe it's decentralized, maybe it's not. There are ways to get the non-custodial or the self-custodial world to interact with the traditional financial system. And I think it's going to be a combination of, giving people the freedom, but making sure there are clear kind of frameworks so that, we can protect against the things that we don't want to see, including financial crime and other things like that.
Yeah, 100%, 100%. And yeah, going back to the stablecoin issue thing, I think most recently, if you go back to like 2021, 2022, back when the NFTs and collectibles were the highest trend that we had, um, you had a lot of companies issuing their own loyalty tokens, their own collectibles, and all of this movement. Now we're having seen kind of the same wave from financial companies and non-financial companies now issuing purpose-built stablecoins. So just so we can get into the last things here, why will I, as a company, of course, it depends on my vertical use case, but what does it make sense for me to issue my own stablecoin instead of using USDP, for instance, which is already there? Like, how how are the ways that I can capture more value if there is one or is only a breaking perspective if I decide to issue my own stablecoin?
Yeah, I think that's a great question, and I think it's becoming more and more top of mind as the stablecoin market has really grown and boomed since the Bridge acquisition. So I think when people ask that question, they think about Tether, they think about how it's one of the most profitable companies in the world for the employee, maybe just in the most profitable financial company and most profitable any company, and they see the yield and they say, okay, well, great, I've got all of this money that is out in the market, is being distributed, through consumers and businesses, and I can earn, and it's a good business model. Also, there's branding, and it makes me seem like I'm tech forward, uh, because there are, you can think about if you put side by side, issue your own stablecoin or use an existing stablecoin. There are a lot of benefits from using an existing stablecoin that you get if it's yours or someone else's. You are seen as tech forward. You have settlement, increase in settlement efficiency, better interoperability with global markets, and so on. But the benefit that you can still earn yield also depending on the model, but then you don't necessarily have the branding aspect. And so I think most companies or many companies see the opportunity to put the brand out there and earn yield on their distribution in their existing network, but don't see the costs that I mentioned earlier, the regulatory element, the reserve management, the network building, the distribution, the listings, the kind of capital market interaction, and liquidity. It's actually a very, very large and arduous task to distribute a stablecoin. And so, interestingly, this is why the global dollar was born. You had many customers come to us, large institutions, and say, hey, look, I see all the benefits of issuing a stablecoin. I want yield, and I want to be seen as being tech forward, and I want to have all the benefits of stablecoins, 24/7 settlement, and the things I mentioned. And then we say, great, this is Paxos. We are a stablecoin issuer as a service. Here's the list of other things that you need. The capital, the connections with all the exchanges, and network building and distribution. And, then they look at the list and say, okay, that's not what I expected. I thought I could just get the yield and distribute within my own channel. And so USDG is essentially enabling enterprises, companies, startups to have their own stablecoin without essentially act like as if they're having their own stablecoin where they're getting the yield. And USDG, the way it works is, depending on how much you hold and your activity, up to 100% of the yield is distributed to you, and you can actually earn even more than 100% based on how much you're minting and how much you're driving the adoption in general. You essentially enables everyone to be like an issuer without the kind of painful, expensive, arduous task of all those things that I mentioned. And so we think it's a really great model for institutions thinking about, okay, I want the benefits of a stablecoin, but I don't want to have to deal with all of those different things. I want to plug into an existing network. And I really think that if you think about who it makes sense for, it really matters to have distribution. When you think about what the elements of value of the stablecoin that I mentioned at the beginning, beyond the tech, beyond the regulation, and beyond the trust, it's really the availability and the distribution that's important. And so, some companies who have existing distribution where they have consumers and they have merchants, or they have a network, or there's a marketplace, and they see that they're already sitting on either stablecoins or fiat, that tends to be a good use case for issuing your own stablecoin. But even in those cases, the work required to kind of really, really scale is still sufficiently large that it likely makes sense to plug into an existing network. And therefore, you benefit not only from your distribution, but you're combining the distributions of the other network partners in the network. And that's why we think the global dollar network and USDG is a really, really good way for institutions and others to have their own stablecoin essentially without having to build the entire network and distribution by themselves.
Yeah, totally agree. What a way to end up right here. Yeah, I loved it. I think it really makes sense. And from our perspective here at Lumix, we see this a trend that is not a hype. Of course, there's a lot of hype in the ecosystem, and of course, it's good for all of us, but we need to separate things. And I truly believe this is something that brings a lot of value to the table, especially because you're now being able to leverage an existing network, like you mentioned, and share value with other players in the ecosystem without needing to have the burden, regulatory, capital, blah, 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 that you also mentioned. So I think this can be something really powerful for the whole ecosystem. And I foresee a lot of institutions and fintechs and, startups as a whole trying to get involved. But yeah, Chuck, man, amazing talk. Thank you for joining. And I think we could keep here for like 1 hour more talking about a lot of things. But yeah, like just want to leave you to what you would like to do, like for last word here.
Yeah, no, it was a great conversation. It's always good chatting with you. For anybody who's interested in learning more about stablecoins, definitely follow this podcast. You can follow what I write on LinkedIn and Twitter, and we'll post those details in the podcast notes. But in general, really, really excited for the space to grow. I think we've got a 5 to 10 year runway of incredible adoption, not just in emerging markets, but in developed markets as well for a range of use cases. And there's ways that stablecoins and blockchain technology will be integrated into the financial system in ways that we aren't quite considering today. So I think it's just an amazing time to kind of be in the industry.
Yeah, let's do it. Sounds bullish. But yeah, thanks guys.
Awesome.
Thanks for catching up in this episode. A lot of more coming. See ya. Bye.